Hey, good morning, everyone. Thank you for taking the time to dial in live. We're going to jump right into it. And to be honest, I don't know if we'll cover the whole 20 minutes or not today, because there's not been a whole lot of change over the last couple of trading sessions. But I do want to review both old crop and new crop charts, um, and just try to kind of keep some perspective on what we have happening. If you look at equities and the dollar index and oil, and natural gas, the volatility is really intense, and there seems to be a huge um, overlap between what's happening in those markets versus what's happening in our markets, right? Our little food markets. You think about the natural gas trade from yesterday, which um, it would kind of be the equivalent of like corn being limit up to then being limit down on expanded limits for 2 days in a row. I mean, the move in natural gas was just absolutely enormous in proportion to what we see in grains, and I think that market finally is reflective of just how big of a deal the Ukrainian situation really is, and how tight supplies really are. Because what caused that is we had the natural gas exporter that exports about 20-25% of our natural gas. That plant blew up and had uh, and at first they said it would only be down for a couple of weeks, and now they're saying it'll be maybe next year when it comes back on. So that sent natural gas in Europe sky high, and natural gas here crashing lower. So that spread just completely went crazy in order to push natural gas into Europe, because they can't get it out because of Russia. So you see the volatility that happens when the world needs to redirect a commodity, and it needs to push it to where it goes. That's the role of spreads, and that's the role of basis. So kind of fundamentally, what we're looking at in the grain market, I look at corn, and it is insanely bullish. The fundamentals are so radically bullish that I have no idea why we are trading anywhere near where we're actually trading. Let me pull the corn chart up here. If you look at the forecasts, and well, if back up, if you start with our balance sheet, and you look at the margin for error that we have on yield for new crop, there is basically none. And so the market has been in this need to ration mode for several months, but we're not doing it preemptively. The market is waiting for all of the fundamentals that are bullish to actually manifest and become real before the market will trade it. Because you look at this forecast that we have of weeks and weeks on end of extreme heat with below normal precipitation, with a tight balance sheet, and you'd think, man, we've got to be going higher. And I really think that is coming, but the question is when will the macroeconomic stuff kind of let it happen and break like natural gas did? In Ukraine, there's something like 20 million metric tons of corn that is in silos in the Ukraine, and those bushels are trying to find their way out because they're now starting harvest and they have nowhere to put it. So they're going to be forced to move into ground piles, and they're just going to sit there and just continuously um, uh, add to what they've got, and they're harvesting wheat, right? Not corn yet, but they don't have any space, and so they're just going to have to sit there and pile it until they completely revamp their infrastructure. Think about the infrastructure that we have here in the Midwest, and specifically here in Kansas, where we've got we've got terminals and railroads every 15 miles. It's everywhere. You can't drive very far without seeing a shuttle unloader. I mean, we have infrastructure that's really powerful and really good for moving commodities around, and they just don't have that in Europe. And so in order to get the bushels out, they've got to go in and build it. And the market's like, well, the bushels are there, so we need to sell it, because we want to incorporate that into supply. Well, supply on a ground in the middle of Ukraine that requires $1 trillion of infrastructure to move shouldn't be worth very much to the market. So I think as the market digests and realizes what is really happening, I think that they're have got to move in and start buying it. I was talking with some buyers yesterday, and some resellers yesterday, and the basis levels in Kansas are really insane. You know, our basis level here in Pratt will fluctuate from, we'll call it 50 under to 50 to 60 over is a really good basis. So you've got about $1 window. You know, the basis right now is $1.85 over, and going higher because they really can't originate any bushels there. That puts basis out west probably closer to $3 a bushel. You know, basis in Nebraska has been exploding. So the front month basis contract or cash market is screaming to the market that, hey, we've got a ration. We don't have enough. We are doing everything we can to pull bushels in, and we can't find it. So flat price has got to go with it, and it has to do that in the front in order for it to really do its job. So I don't know why it's taking so long, but I think I think it's coming, and unless we see some sort of a forecast flip and change that's going to really prove out the bushels, then I think that that we've got to be going higher, because you just simply can't ignore the actual cash market, regardless of what the USDA says. So that's enough about kind of fundamentals. They're bullish. There's no other way to interpret it. Markets are getting pushed around based on just I think money flow and the insecurities in the equities are flowing over into the commodities. But if you look at beans, you look at corn, you look at wheat, every single metric points to higher prices, and that we have not done our job yet to slow down demand at all. All right, so here's July corn. You know, we're trading right into our midpoint of our cloud. So to us, that screams 50-50 ball. We don't know technically which direction this is going to go. If you start to analyze the shorter term charts, though, every one of them is leaning more and more bullish, not bearish. And if the bear case, if we're going to push this market lower, they need to do it today. They really need to get in, get after it, and break these two little yesterday and Monday's low in order to push this thing down into new lows. Because if they don't, and we're able to slide and consolidate for, you know, Wednesday, Thursday, Friday into a long weekend, then and this weather forecast holds, then I think we're going to gap and go, and I think we've got to push it way higher to push these futures markets into compliance with what our cash market is doing. So I think corn is actually okay, but if we see another equity sell-off and that thing accelerates to the downside, then we should work lower, and we probably will fall back into this range again, and base and support, and then turn our attention back to weather. So I'm not interested in selling anything new crop. You know, we were talking about new crop basis yesterday too. Let's look at our December chart. Where did I have that? Here we are. Here's our December weekly chart. You know, we're consolidating right at the top of the range. We've got a little, maybe this is a little way forward. I think we got to push up higher and go much higher on new crop too. New crop basis, we've been talking to people, and it might be as much as $1 to $1.50 over, but no one is too interested in pricing it because they have no idea where the market really is. It might be much higher than that because they can't source supply either, and everyone is unsecure about what is happening. So we start looking at export numbers, and you know, the theory is we have to ration new crop by decreasing exports. Well, that's not going to be enough because the cash market is screaming that we're way hotter than even that would suggest. So I think that this is just a little consolidation before we explode it higher, And I don't know if that happens today or Friday or next week as these forecasts roll. But unless they turn wet and break some of that heat into the first half of July, I think we all know what happens if we're hot in Iowa during pollination. This thing turns parabolic. And the weather forecasts are not suggesting anything less than that. So I think December corn looks really good. I think July corn is 50-50, trading that current market or that kind of just trading in the spot, waiting for something to manifest. And when it does, I think it's got to go fast. All right, so let's talk about soybeans. What about them? I mean, gosh, we've broken nearly $1 since last Thursday, and we did it in fast fashion. Well, when oil started to break and equity started to break, funds just started to liquidate. And I don't think it has anything to do with fundamentals. You look at FOB prices in South America. You look at them in China or all over Asia, and they're much, much higher. Yesterday, our basis did break on beans a little bit on the rivers, and they broke 10 or 15 cents. So a lot of analysts are saying, oh, well, that's the time that's moving out. Well, remember, they've been buying it like crazy and doing everything they can to get bushels in. And so moving the price down after a big break is actually them negotiating with the farmer, just trying to say, hey, see, you better chase this lower in order to shake the weak hands out and to push the bushels into circulation. Because technically here, look at what we have. We have a little 1 up and a 2 down, and as long as this cloud holds on July soybeans, they're going to turn around and push higher too, up into these higher levels. Friday's close on beans was the 3rd highest close on record for soybeans. And so we came in Monday morning and we started selling it, and we pushed it down into $1. That in and of itself really doesn't mean much in context of the 3rd highest ever close, because in order to break through it, sometimes you've got to back the bus up and then break through the wall. And I think when it does it, it's going to be explosive, just like on corn is, because the supply situation is not any looser in beans than it is in corn. Now, the weather's not quite as helpful there because we're not going to hurt our bean crop until August, but 3-4 weeks of 105-degree heat isn't going to help them either, not without a lot of moisture. So no, we're not going to kill the crop, but we're definitely not going to help it, and we're not going to take out the top end of it. So I think we're bullish beans. I think we're bullish corn. I think we're stagnating a little bit based on what the Fed's going to do and and kind of global macroeconomics. But overall, I don't see anything that's changed our outlook there. So let's talk about wheat. Here's your picture of July Kansas City wheat. We're down in this wave. We're consolidating right on top of our daily cloud, and harvest has started. And yield reports are anywhere from, hey, it's not that bad, to why did I even harvest it, right? And so I don't think the fundamentals in wheat have changed at all. In fact, I think they're getting more bullish, not less, because of the logistics situation in Ukraine. But the harvest pressure is just kind of keeping a lid on it for now. But if corn is $2 or $2.50 over the board, that puts corn at $10.50, and if wheat at harvest is 50 cents under, that puts it at $10.80. So you're within 10% of the value of wheat to corn, and the feedlots will tell you that's kind of their metric. That's where they want to be in order to switch over to wheat. So wheat's got a floor in here that I don't see getting broken, unless we're just totally missing something, and corn lets wheat gets put into the ration. I just don't know why it would do that, or if corn breaks and takes itself out. I don't understand that at all. But I think that this shelf is the floor. I don't think wheat's going lower. I think it's got to work much higher once the harvest pressure is done. And I think that high up here at $14 is just going to go away, and I think we're going to blow right on through it. And if we don't get a break in weather, and we don't get a break in politics, and we don't grow something somewhere, then it's moving much higher. Kind of internationally, some of the reports that I'm reading, and I don't know a lot about the global wheat trade, and definitely don't have the contacts to speak with 100% certainty. But what I'm reading is that wheat is trading privately all over the world to governments at all-time high prices, and it's much stronger than it even was when the war started to break out. And that's because the infrastructure issues are going to take far longer for them to work themselves out than the market is willing and able to do. So that puts us as the world's residual supply. We're the only ones that have it in abundance, and we're the only ones with the infrastructure to move. And so when those things all manifest with corn and beans and wheat, then I think that every one of them goes, we set new highs that I'm not sure we've thought of yet. So with that, what do? Well, we just sit tight. I think we be patient. I think we let the market do its thing. For those of you that were nervous, we've got some protection on wheat, kind of just defending this floor. If anybody wants to defend more, that's okay. But I would definitely make sure our upside's open. And there's really two good ways to do that, right? You can set your floor and make sure that you don't let high prices get away from you by either selling cash and re-owning the board. You can get into options, and we can create an option strategy for you that helps and that you're comfortable with. You can buy puts, or you can manage this downside risk with options, and we can create that strategy for you too. Both are the same thing. There's no difference between a synthetic short position and a synthetic long position. What's synthetic mean? Well, it just means that we've done it on the board. It's really nothing special. But financially to your farm, it's the same thing. And if you could draw arrows, I really think wheat's bearish arrow looks like this. I think it looks very sideways. Kind of. If we're going to break it, it's not going to go. We're not going to drop it off a rock. But I think that this arrow might go straight up because we're really that apocalyptically bullish, all things until weather breaks. So I would do a position on the board here that is bullish, that gets you long gamma and really pays out nicely if it goes up, and collect your cash in the nearby in order to finance it by selling cash. I think that's your best bet, but not everybody would agree with that, and I certainly understand it. So another way to do it is just to buy puts and call it a day and leave your upside open there. So lots to talk about on wheat, lots of different ways to manage that position. I do understand the need to preserve $11 wheat and not let it go away. So we've talked about that, but I don't think that our downside is great at this point in time. Okay, that is what we've got for you today. I hope that at least this gives you something to think about. Call us and let us talk through some of these positions with you. We're happy to do that and get your farm positioned for how you want it to look. Don't forget, with options and with futures, there's an infinite number of ways that you can create positions to put your farm where it will win and won't get hurt too badly. There's always risk anytime you put a position on. It's a futures market. There's always risk anytime you do something, and so you've got to create a position that you can afford to hold and that you can afford to live with. That's what I've got for you today. I hope you guys have a great week. I hope harvest is safe, and I hope the yields are surprising to the upside for you. If you have questions, please reach out to call us, and we will talk to you next Wednesday.